This video is a review of Panasonic's financial results for the first quarter of fiscal year 2026, covering the period from April to June 2025. Panasonic is a Japanese electronics company founded in 1918 in Osaka. It makes home appliances, batteries, automotive, and industrial systems, and supplies EV batteries to companies like Tesla. Summary: for the first quarter, sales increased across all segments, but overall sales declined due to the deconsolidation of the automotive business. In 2024, Panasonic sold most of its automotive segment to Apollo Global Management, keeping a 20% stake. The automotive business continues as a separate company, while Panasonic focuses on EV batteries and energy storage. Within individual segments, sales of generative AI-related businesses in industry and energy grew, along with higher sales of process automation in Connect. Adjusted operating profit rose overall as gains across all segments offset the effects of U.S. tariffs and the automotive deconsolidation. Net profit improved because of better income tax performance, even though non-operating income and losses worsened. The group-wide full-year forecast for FY2026 remains unchanged, with the potential impact of U.S. tariffs from the second quarter onward not yet included, because the situation is still evolving and requires careful evaluation. For the first quarter consolidated financial results, total sales declined 11% year-on-year to 1,896.7 billion yen. However, excluding the automotive business, sales actually grew 2% compared with the previous year. Operating profit increased, and net profit also improved by 1% to 71.5 billion yen. The progress rate against the annual net profit forecast is only 23.1%, indicating a somewhat slow start to the fiscal year. Adjusted operating profit analysis by segment. There are four main segments. Lifestyle focuses on products and services that enhance daily living, such as home appliances, personal electronics, and wellness solutions. Connect provides communication and networking solutions that link people, devices, and information. Industry delivers technologies and systems that support manufacturing, automation, and industrial operations. Energy offers solutions related to power generation, storage, and management, including renewable and conventional energy sources. Overall, adjusted operating profit increased compared to the previous year, as gains in all segments more than offset the loss from the deconsolidation of automotive. In lifestyle, profit rose from steady consumer electronics demand, recovery in European heating and cooling, and stronger electrical materials sales in Japan. Connect profit grew with higher sales in process automation and mobile solutions despite increased Blue Yonder investments. Industry improved as demand for capacitors and circuit board materials rose, with generative AI growth supported by price adjustments and cost rationalization. Energy profit increased from higher in-vehicle battery sales, IRA tax credits, and strong energy storage demand despite higher factory ramp-up costs. As a result, adjusted operating profit expanded across the board, with all segments contributing to growth. Full-year forecast. The group-wide outlook remains unchanged from the previous forecast. Annual forecasted sales are 7,800 billion yen, with a net profit of 310 billion yen. The potential impact of U.S. tariffs from the second quarter onward has not been included in the full-year forecast, as the situation is still evolving and requires further assessment. Impact of U.S. tariffs. Panasonic applies tariffs through price revisions, but has not yet factored their impact from and quarter fiscal 2026 due to uncertainty. The company plans short and long-term measures to minimize effects. U.S. sales in fiscal 2025 were about 1,570 billion yen across all segments. The estimated impact on adjusted operating profit is under 1% of consolidated sales and considered manageable. Panasonic has set the annual dividend forecast for fiscal 2026 at a total of 40 yen per share. This compares with a total dividend of 48 yen per share in the previous year. The forecast reflects Panasonic's policy of distributing profits to shareholders based on business performance, taking into account its financial condition and other relevant factors. It is disappointing that the dividend has been reduced. Stock price. This chart over the past year shows the stock price in Japanese yen at 1,541 as of September 5th. This chart shows the stock price in US dollars at 10.35 as of September 5th. Panasonic's stock price has not risen as much compared to other Japanese stocks. Current PBR is 0.78 and PER is 11.6. Dividend yield is 2.60%. Compared with the past few years, the PBR and dividend yield are roughly the same. However, the PER is slightly higher because the forecasted EPS is expected to decline from last year. Conclusion: Panasonic's first quarter showed resilience despite the deconsolidation of its automotive business, with overall adjusted operating profit rising across segments. Excluding automotive, sales also grew year-on-year. The full-year forecast remains unchanged, though the potential impact of evolving U.S. tariffs will continue to be monitored. Overall, Panasonic is maintaining steady growth while adapting to structural changes and external challenges.